afternoon, everybody. Super excited to be here this afternoon, and basically just want to briefly talk about our next topic, which is the liquidity. Just to introduce us to the different types that we have. I believe that we cannot hear me because I'm not going to actually speak louder than this. Okay, but if you pay close attention, I'm sure you can hear every single thing that you have to say this afternoon. All right, so basically we are following the syllabus that we have, and so far we've been able to talk about market structure, talked about trends, we've talked about break of structure, change of character, other blocks, fair value gaps, optimum trade entry, and the sorts. So now we are at liquidity, and we're just going to quickly look at the different types of liquidities that we have. We're going to do some explanations theoretically, and then we are also going to look at it with charts as well. So as to understand what it is, what it truly is, when we see it on our charts, and to understand exactly how to go about it, right? And to understand exactly what to do with it, exactly how it how price, how it affects the movement of price, okay, how liquidity affects the movement of price. Okay, so let's just go to a plain board where we can be able to write. So let me open this guy here. Okay. Wow. As I open this guy, I'm seeing something entirely different on USD. Although we are on a bullish streak, okay, but I'm seeing something entirely different. All right, but we're not here to look at the charts. We're here to do some explanations about what liquidities are. Okay, so first things first, we need to understand that my screen sharing is paused. Why? Why is it paused? I want to be paused. Okay. I hope we can still see it. Okay, hold on. Let me just change what's on it because I guess right here. Sharp. Okay. So we're just here to do some kind of explanations on what liquidities are. Okay. And we need to understand that liquidity is like fuel, is the money actually that price needs to actually move up and down. So basically, when you see price movement up and down, back and forth, all it is looking for is what? The next on liquidity. So as a trader, it's your job to understand where the liquidity is located so that you can be able to join price to grab liquidity. Okay. It is your job to properly identify where the liquidity is located so that you can be able to join in the price action and you can turn out to be on the profitable side. So first things first, like we said, liquidity. I'm going to be writing just for those people who understand the necessity of actually writing. So liquidity is the fuel of price. Okay, that's just an easy way to say it. Liquidity is the fuel of price. So the major thing price does in the market, major thing price does in the market is move up and down in search of liquidity. In fact, it goes from one liquidity point to another. In fact, price moves from one liquidity point to the other. One liquidity point to the other. Yeah. So if price moves from one liquidity point to the other, like I said, it's your job, it's your duty to position yourself to properly understand where is price coming to, what is the logic behind why it is moving the way it's moving, where is it going to. Okay, so price moves from internal liquidity, price moves from internal liquidity to external liquidity. Okay, and vice versa. And it's important that we understand that price is not just going to wake up in the morning and just move from one liquidity point to the other. Okay, if it were that easy, everybody will be making money from the market. Okay, it's your job, it's your job as a trader to understand where price is at the moment. And with your knowledge of liquidity, you can be able to ascertain, you can be able to predict, you can be able, the probabilities can be high on your side as to where price is possibly going to. All right. So we have different types of liquidities. Basically, we have about 3 types of liquidities. Well, of course, that's what was that? So we have about 3 types of liquidities. Um, we have about 3 kinds of liquidities. Just a second. Trying to buy Euro USD, but I don't know. It looks like it wants to sell though. So we might as well just be careful with the whole thing. It looks like it wants to sell. So we have about 3 types of liquidity, right? We have types of liquidity. Hold on. So here we have types of liquidity. So we have types of liquidity. We have the inducement liquidity. Okay, the inducement liquidity. We have the structural liquidity. Structural liquidity. And we have the, okay, sorry. Structural liquidity. Then we have the transactional liquidity. So basically, what people have in mind when we talk about liquidity is you think that maybe liquidity is a point where you have like an equal high or an equal low, right? That is like basic, that's like basic liquidity discovery. That's like kindergarten way of understanding what liquidity is. Okay, um there are certain logic behind why price forms a particular week. Now, it should interest you to know that a week, a week is often, a point of liquidity. What is a week? This thing that we can see here, let me label it. The week of every candle, the week of every candle can constitute, to form a liquidity point. Like, for example, this week right here. This week, believe me, like there's nothing that actually happens in the market by chance. Every single move, every single thing, every single week, every single body has a representation, has a use, so to say, why it occurred. So therefore, people thinking that equal lows or trend lines are liquidity points. I mean, that is basic kindergarten type of liquidity. So basically, let's explain what all of these types of liquidities mean so that when we see it in the market, we can easily be able to identify it. So quickly, the inducement liquidity, okay, the inducement liquidity tricks a trader into taking early positions, right? Usually the most recent of the market or the most recently. Okay, this is just a basic. We're going to still have some explanations. So hold on. So you're going to inducement liquidity tricks a trader into taking an early position. Okay, price most times will form like it wants to do a particular thing, it wants to go a particular way. But at the end of the day, it does not go there. So basically, inducement liquidity, how can you identify an inducement liquidity? How can you identify an inducement liquidity? So here you go. Okay. Can you identify an inducement liquidity? Hold on. Hold up. Hold up. Okay. All right. All right. So, how can one identify an inducement? How can someone, like the name implies, induce, right? Like the name implies, induce. It's what it wants to do is it wants to trick you. It wants to fake you out. It wants to form like it wants to do something, but it really doesn't want to do that thing. That's why the name is called induce, right? Now, how can you identify an inducement? Number one, there has to be, okay, let's put this on small caps. There has to be an impulsive move. Okay. If you're a trader, you already know what an impulsive move is, right? An impulsive move is a strong move in a particular direction, whether it is a buy move or a sell move. As long as that move has a very, like what you can see, as long as it has a long candle or some what do I even call this? This is like a build-up of bullishness. As long as it has something like this or a long straight candle, that's an impulsive move. So we are saying that inducements happen after an impulsive move. So when you see an impulsive move, expect a bunch of liquidities to form. Now, this bunch of liquidities, we can call them what? Inducements, right? Now, there has to be an impulsive move. Then, okay, I don't think I should label this thing. There has to be an, how to identify an inducement. There has to be an impulsive move. And there has to be a retracement, okay? There has to be a retracement, or you can call it a pullback that doesn't fill in. Okay, what is it? It doesn't fill in. Okay, fantastic. Now, anytime that we have an impulsive move, price leaves behind something called a fair value gap, which let's just look at it. Let's look at it here. Okay, you can see now that this is Euro USD, and for some days now or for some weeks, Euro USD has been buying. That means that it has left a lot of gaps, a lot of liquidities to be grabbed. So immediately price starts to sell now, you will notice that the first thing price will do is to jump from one liquidity to the other. So like for example, now you can see this chart right here. You can see this Euro USD trade right here. Let's just, you can see this Euro USD trade happening here. You can see this impulsive move, right? Fantastic. Now, this is the fair value gap price left behind with an order block. So this zone is a very, actually this zone is a very valid zone. Now, let me show you where the inducement liquidity is on this particular range, okay, on this particular range. So the move, right? The move started from here, strong impulsive move. And as you can see, anytime that there's an impulsive move, price leaves a fair value gap. All right. So an inducement liquidity is that pullback that does not fill up to the fair value gap. You can see that there's still a gap here. And you can see there is a wick here. This is a wick. This is a wick here, which price has just what? Taken. We can just mark it out. Can just mark this place out as a place that price has what currently taken. So an inducement, how to spot inducement is very simple. It's a spot, it's a wick, like wick, W-I-C-K, wick, W-I-C-K. It's a wick or a pullback that does not fill up the fair value gap that price left behind after there was an impulsive move. So there is every probability that price will come to take that liquidity. So for some traders that are scalpers, for example, that have maybe they have a sell bias because maybe they don't pay attention to things like fundamental news. I mean, somebody that looks at this trade right now might think, hey, maybe price wants to sell. But the funny thing is that you see the fundamentals have a very strong directional tendency. They can dictate what happens in the market. And fundamentally right now, Euro USD is very, very bullish. So what we are seeing here, basically, how can somebody frame a trade around here? You can see that there was a pullback that did not fill up the fair value gap. So price has taken that pullback, and what is it doing? It's going up. Now, this 4 hours chart is not accurate. If you look at the one on FX, on Forex, where I have my analysis, you can see what it looks like. This is the real chart. This is what it really looks like. This is what it really looks like. That place we marked out as an order block is somewhere around this zone, right? So guys, it's very simple. Using this other chart as an example, here's that chart. I think it was nice. Using this, let me remove this blue thing now. Since we are on this chart, an inducement is a wick, is a candlestick wick or candlestick body, whatever, that did not completely fill up this order block or the fair value gap. So price will eventually take that liquidity, that wick that didn't fill it, and what? Go up. So how can you identify inducement? There has to be an impulsive move. Okay, there has to be an impulsive move in the market. It's very important. Then there has to be a retracement that doesn't get up to the premium or discount level. Okay, I mean premium or discount level is simple. It doesn't cover the fair value gap that price left what behind. So price, rest assured that price will always come back to take that wick or that candlestick that does not fill up that criteria. Why? Because it is obstructing price. It's basically leaving a gap that needs to be filled up. Okay, fantastic. So discount and premium levels is another topic that we are going to be looking at separately. I mean, this particular topic is for people who already have an experience, an idea about how trading works. This is not for newbies at all. So there has to be an impulsive move in the market. There has to be a retracement that doesn't get up to the premium or discount level, for price to come back and reclaim. Price will always, for price, very price will always come back. Reclaim. Okay? So that is just one type of liquidity. And as you can see, we have a lot of wicks in the market. We have a wick here, wick. Everywhere we have wicks. Okay, so there has to be some other type of liquidity. Now let's look at okay, so after investment liquidity, price should take two internal structures before continuing in sharp direction. Okay, if price takes out a single high after the induced leg taken, taps into the supply and demand low created, we must wait to see a reclaimed high or given the bias. When price takes a low, expect price to take the next high and vice versa. So what did I just read? What did I read and how does it make sense? When price takes a liquidity, right? Allow it to bounce on the demand zone. What is a demand zone? Demand zone is anywhere that price is selling from. Supply zone is anywhere that price is buying from. So for your liquidity confluence to be valid, it has to be close to where a demand or a supply zone. And as you can see, this is another block and also a demand zone where price should buy from. So price has taken this liquidity close to another block that is also sitting on a demand. So we can actually say that we have a trade right here. We must not be waiting for textbook explanation because sometimes price does not give you all those textbook entries that you might want. Like for example, because we have explained that when price takes an inducement liquidity, which is this though right here that it took, right? We should expect it to tap into this other block or demand zone before continuing in the initial direction. So just because that is a textbook explanation does not mean that that is what will always happen, although it's possible that that can happen, right? But what our key takeaway here is the logic behind what inducement is, the logic behind why price behaves the way it does when it takes a particular week, right? And the logic behind it is what? That if it takes an inducement close to another block or close to a demand or supply level, ideally, according to the textbook, they say you should wait for it to like break a substructure before buying. But I mean, all of those things don't really matter. The major, most important thing here is understanding the logic behind inducement liquidity. Now, the second type of liquidity that we have is called the structural liquidity. Okay, now structural liquidity has to do with old highs and old lows. Okay, it has to do with price going to reclaim old highs and old lows. So what does this goes to tell us? It goes to tell us that every time in the market, price is going to do one thing or the other. Is that going to take an inducement, or is going to reclaim an old high or an old low, or is going for a transactional liquidity? But let's just give a textbook explanation um, of what a structural liquidity is. So we have structural liquidity. Right, fantastic. Now, how can one, okay, so let's just say the logic behind structure, like the name implies, structure. Structure of the market is basically referring to where original price trends start from. Where did they buy start from? Where did they buy end? Where did the sell start from? Where did the sell end? That's why it has to do with old highs and old lows. It can be an old high of a daily candle or an old low of a daily candle. It can be an old high of a weekly candle or an old low of a weekly candle. And it can also be an old high of a monthly candle or an old high of an old low of a monthly candle. It depends. It can be anything. It can be anything, but how we know which one to go for is based on understanding market structure. So, structural liquidity, the logic behind structural liquidity, right? Behind structural liquidity is that liquidity price will always reclaim old highs, okay, old lows, such like what we are seeing that is happening on Euro JPY right now. We are noticing that price has gone to buy and take the previous old weekly high, right? And if you go and check Euro JPY right now, it is still buying. But the logic there is that anytime price goes and reclaims these old highs or old lows, it's possible to see like a retracement from that level. So therefore, anytime that price goes and takes an old high or an old low, let's say it takes an old high right now, we expect that it should turn back from there. Immediately, or maybe it might just consolidate for a while, just do some consolidation, and eventually it will still start, it will change direction. That is that is that is the logic behind understanding what liquidity is. Okay, it can serve as a confluence. You know that, okay, if price takes this high, just like what happened to me on Euro JPY yesterday, just that Euro JPY is very bullish, but it took an old high, right? As you can see, I labeled it here. I said last high. So price took an old high, and we expected that price should drop. So if you notice what happened here, there was a tiny drop. There was a tiny, look at this red candle. There was a tiny drop, but it quickly continued buying. Why? Because the the commitment of trader sentiment for this week is bullish. But if you notice now, you can see a bunch, based on what we talked about, you can see a bunch of lows that did not quite fill up the fair value gap. Come to talk more about that block. Now, these lows, what can they be called? These are a bunch of liquidity, inducement liquidity. Why? Because it's a pullback that did not get up to the what? The discount zone for us to say we want to what? Engage in a buy. So when price eventually starts to sell, the first thing we want to do is what? Sell to take this inducement liquidity. A smart trader knows that this will be the first take profit because price must come to take this liquidity. And when it takes the liquidity, there's a probability that it will continue going lower to what? Fill up the fair value gap. Because fair value gaps are like imbalances in the market that price must fill up. Price must fill up these imbalances for it to continue moving in the right direction. Okay, it's possible to say that price might be selling from here, but I doubt because CPI news just came out and price is highly bullish. So we just have to keep looking for buy opportunities, which is the same thing that we are doing on Euro USD, looking for buy opportunities, regardless of what price shows us. Unless price goes and take our stop loss, fine and good, but we are looking for buy opportunities. Okay, and it should interest you to know that the 4-hour candle just opened as well. So we might as well bank on it. So, but let's go back to the other one that the other charts where we are doing all of our discussions, right? So we say this, the logic behind structural liquidity is that price will always reclaim old highs and old lows. All right. So it's very simple. It's very the structural liquidity, the last low, okay, before the before the last day before main, okay? The last low before main low or last high before main high. Now, what does that mean? Let's explain it. Okay, from the looks of things, it looks like price might be buying into this, might be selling rather into this other block to continue buying. So if somebody wants to engage in this trade right now, they can take a buy, but they can just put their stop loss anywhere inside this box. Okay, they can just put their stop loss anywhere inside the box, inside this blue box. All right. So structural liquidity being the last low before the main low. What does that mean? Sorry for using that word. What does that mean? What does that mean to be the last low? Now we are on the 4 hours, right? And as you can see, this is a low. Okay. Okay, let's look for a more interesting let's look for a more interesting example of a structural liquidity. Last high before the main high. Fantastic. Now, if you notice now, this is a high and this is the main, this is another high. So what the price do? Price took this high right here before it dropped. Okay, look at it. Let me do this. Let me do this. So here we can see what happened. You can see price, how it reacted. So here you can see a bunch of highs, right? But what happened? Why the price suddenly changed direction? Remember, we said that anytime that price takes liquidity, it is bound to what? Change direction. So here you can see there was a high here. There was also a high here. Now, not only was there a high, there was a demand level, which you can see this is a 4 hours demand level, right? And you notice that price has been entering that demand level, drop, enter the demand level, drop. The last one, it took this high. This is the last high. This is the very last significant high. If anybody is looking at this trade right now, they can be able to say this was the last high. But then there's another high here. So this is the structural liquidity. So price taking this liquidity here, okay, immediately it took this high. What happened? Immediately it took this high. What happened? It changed direction. So structural liquidity is the last high before the main high. So price will always take that before changing direction. Now let's look at it on a downtrend. Let's look at it on a downtrend. Okay. So you can also call it a sweep. Look at this bunch of lows here, right? These are lows. And what happened? What the price do? Price swept the lows. Price took the lows, entered into the fair value gap. You can see it's only 4 hours, right? So there's a small, tiny fair value gap here, or you can call this thing a supply zone. Now you can also see this little order block here. So we have a complete what? We have a complete confluence here. Why? Because this was an impulsive move. Remember, this was an impulsive move. Price now left some tiny, maybe you can call this, like for me personally now, I don't differentiate liquidity. Liquidity is liquidity. I don't care whether it's inducement, I don't care whether it's transactional, I don't care whether it's structural. Liquidity is liquidity. It all depends on where I see it. Like for example, if I see something like this, I consider it liquidity. I don't care the name. I really don't care the title of the type of liquidity it is. All I know is that price should clear these lows, sink into this supply zone, and do what? take the action that it wants to take, right? So it's the same thing. Let's look for another one. Just Euro USD is not necessarily going to give us what we want, but I'm sure that on Euro JPY, right, we can find it. I'm sure that on Euro JPY, we can find all of those things. The last low before the main low. So here you can see that this is a main low. Okay, so this is a main low right here. You can see it. But before this main low, right, you can see a bunch of lows. You can see this low right here. Okay, so what did price do? Price took out this last low before the main low, and what happened? You can see this buy. This buy is what has continued here. This buy has been buying for, this thing has given us more than, it has given us over 600 pips, 670 pips. And if you're a good trader, on this move alone, you should be able to make a lot of money. You should make some crazy money on only this move alone. So, like I said, personally, I don't care about the title. I don't care about what the name of the liquidity is. All I know is that if price takes this liquidity here, this is what is going to happen. As long as I see liquidity close to other block, close to demand level, psychological level, it's a confluence for me, and I will definitely always be ready to execute such trade. All right. So structural liquidity is simple: the last low before the main low and the last high before the main high. Now, let's also look at that here. This was the last high, right? So, like I said, we wanted price to, okay, it's the reaction happened now. Look at it. This was the last high before the main high, isn't it? This is the last high before the main high. What happened? Immediately price took this last high. There was a good movement. Even if the movement was just an inducement, it was still up to 238 pips. This little tiny movement alone was still 200. I mean, if somebody took this trade on their MT4 or their MT5, they're going to be in for a lot of money. They're going to be in for a lot of money. So it serves as a complex. Your job is not to catch all the moves in the market. The market can make all the moves in the world that it wants. Your job is to catch moves that make you money. And for you to catch these moves that make you money, you need to understand some certain logic behind price movement. And one of those logic is understanding the concept of liquidity. Now, a trader that understands that price will always react from the last high before the main high, will position themselves such that immediately price takes this high, they should already be on the trade. They take their position, riding. Anytime I'm trading Euro JPY, I'm targeting 100 pips because price must do a minimum of 100 pips. As long as you're on the right direction, it will do a minimum of 100 pips. And this is exactly that. If you're trading 100 pips on a one standard lot, price goes your way, you're making $1,000 on that trade. Yes, on that trade. Price goes your way. If you're using $2,000, if you're using two standard lots, price gives you $2,000 on that trade. So immediately it took the high, you can see it dropped, gave us 242 pips. So your job is not to be able to analyze the market until they give you a medal for analysis. No, your job is to be able to identify where some kind of movements are going to happen, and then you capitalize on those movements. And when you make your money, go ahead and mind your business. Now, as you can see what is happening right here, we are still on a very strong bullish trend. And currently, Euro JPY is trying to give a buy trade right now. Why am I sure it's a buy trade? I'm sure because number one, we have a psychological level, one. Number two, we have an order block on the 4 hours, which also is confirmed with a fair value gap. That's three confluences. So somebody can actually frame a buy trade from here. Okay? Trading is not a do or die affair. You can easily just put your stop loss. If price doesn't go your way, it hits your stop loss. Simple and short. Okay, so look at it. We can frame a trade. If this trade is framed like this, is a 6:1, that's 22 pips to give you over 22 pips stop loss to give you over, let's count it, 22 pips stop loss to give you over, hold on, hold on. 22 pips stop loss to give you over 100 pips. So I'm going to drop this trade on the group actually. I'm going to drop, although I'm not going to be taking this trade because I'm already on Euro USD buy. So there's no need. Let me just drop it on the group though. Okay. Buy EURJPY at current price. Fantastic. Now, that's that. So structural liquidity is very good to arm yourself with all of this knowledge. Why? Because that is just what you basically need to make money. You don't need heaven and earth. You just need to understand some certain logics that will help you to do what, capitalize on the market moves. Okay, fantastic. So the structural liquidity is last. So anytime that price does, or anytime that price takes a particular, just like we have explained, the last high before the main high, you know that that's like, if it is close to a demand or a supply level or a psychological level, your confluences are aligning. And whenever you have up to 3 confluences align at once, that's a trade. You take that trade without fear, without hesitation. You freaking take that trade. You put your stop loss, you put your take profit, and you monitor it. All right. So transactional liquidity now. Okay, well, I have some graphical representations of what inducement liquidity, structural liquidity will look like. So let me just draw it for drawing sake. It could help somebody because I have all these drawings on my book and it's really helpful. So let me get the part 2 and draw it. So for the inducement liquidity, right? It's simple. How do you identify inducement liquidity? So price starts from here, buys, okay, gives start retracement down to the discount level, then it buys, gives that break of structure, right? Right? Then when it gives that break of structure, it stops here. It does not even get to 50%. It stops at maybe 30%, then buys again, stopped at another 20%. What do you think is these two troughs that price has formed? It's an inducement liquidity, so we should be expecting that price should do what? Price should take these two troughs down to this level, which is now the last low before the main low, before we can see a buy. Now, this is just like a textbook explanation. It does not always turn out like this, but most times it does. So all you need to know when you see something like this, sorry, when you see something like this, for example, sorry, excuse me, let me take this call. Hello, Ella, please, I'm doing something. I'll call you back. Yeah, I'll call you back. So as long as price does not get fill up to the premium or the discount level, as long as if you measure it with your Fibonacci tool, it is showing you maybe 30% or 20% fill up. As long as it is not below the 50% level, it's an inducement liquidity. So expect that price will take that liquidity, get to the last low before the main low, before eventually making its move. So we can label this to be our inducement liquidity. Inducement liquidity, and label this to be our inducement liquidity. where did it write? What's that I just wrote? Let me just write it. Okay, it came up. So this is our inducement liquidity. Now, structural liquidity. Let's draw structural liquidity. Typically, you can identify structural liquidity when price is on a trend. So this is it. Buys, gives a pullback, buys, gives a pullback, right? Buys. So what is the structural liquidity here? It is this low, this low. So at some point in life, in the future, we expect price to eventually clear out all these things that look like a trend line, clear it out completely before eventually either changing direction or it might just continue going wherever it wants to go, right? So some people that have only basic knowledge of liquidity, they will call this thing a trend line liquidity. I remember when I started trading newly, I used to trade only trend lines and psychological levels. All of those basic type of trading will always leave room for error. Okay? Because from from statistical data, we have noticed that when price aligns at a demand zone or a supply zone together with a psychological level, and God now bless you, you see something like another block or a liquidity grab, that is like where your trade is starting to come together. So for a trade to be valid, you want to see it, for you to buy, getting on a buy bias, you want to see your influences aligning at a supply level. For you to be on a sell bias, you want to see your conferences aligning at a demand level. Okay, you cannot just see a trend line liquidity in the middle of nowhere. Sorry, you cannot just see a trend line. Okay, you want to take a trade just because it bounced on a trend line. It can easily break. Price can easily break through as long as the conferences are not strong enough. It can easily break through, and what people will take a loss, unnecessary losses, and all of that. So for those basic traders that just carry this trend line tool and just draw a bunch of trend lines thinking that price will always respect that. I mean, okay, for example, now look at this. We have this right here, right? What did price do? Price, somebody would think that, oh, somebody would think that, okay, when price bounce on this level, I buy. Bounce on this level, I buy. So when it bounced on this level, what happened? It broke the level. So trying to trade with conferences like trend line alone as your major, as your backbone, as the reason why you're framing a trade, will most likely end up in a loss. Will almost likely end up in losses. Okay, so this is what your structural liquidity looks like. This is the last low. We can label it. So this is the last. Okay, we are going to look for examples on the chart that will support this notion. So this is your inducement liquidity. This bunch of lows here that price took. Okay, price took this bunch of lows before it made the move. So let's label this one to be our structural liquidity. So like I said, for me, I don't bother myself with the names of liquidity. All I know is where liquidity should be grabbed. If I see an old high or an old low, I look for some, I look for something, a wick, especially a wick, a candlestick wick. The nearest candlestick wick, I keep my eyes on it and then watch for price action, watch for price reaction. If there's a psychological level there, cool. If there's a demand or supply level there, fantastic. My trades are aligning. But let me warn you that most times, before all of these things align, you need to wait for it to happen. That's why they say trading is what? Trading is a patience game. You must be patient. Before all of these things align, you need to wait. Sometimes you can wait for a whole day, it does not happen. Sometimes you can wait for 2 days, it does not happen. And it is in the process of waiting that most traders take losses because sometimes traders are impatient. They cannot wait all of their confluences to align before they jump on the trade, right? So this is your liquidity. This is what it looks like. This is just like a textbook drawing of what it looks like. It does not necessarily mean that that is like the main thing. All right, so let's look at the last one, which is our transactional liquidity. Don't allow the names confuse you. I know that some people in the future will watch this video, and I have never allowed forex terminologies to be my problem. They are not my problem. When I started trading, I already knew what change of character was before I knew what the name was, before I knew what the terminology was. I already understood the logic of change of character. I understood the logic of so many things. I understood the logic of demand and supply, even before I knew that that was the name. So that's the most important thing. Confused people that don't make money will try to make a big deal out of the names of price movement and all of those things, but all those things truly don't matter. Whether it's a structural liquidity or an inducement liquidity or transactional liquidity, it doesn't matter. What matters is your ability to identify it while on a trade. That's what matters. So, um, transactional liquidity. Okay, so what did I write about? Okay, we already know that the higher the time frame, the higher the strength of the confluence. So if you're seeing an inducement liquidity on the 4 hours, best believe that price must react to that inducement. If you're seeing a last high or a last low on the 4 hours, on the daily, on the weekly time frame, just know that price is most likely going to respect that price action. Now, anything that is happening on the 1 hour, 15 minutes, 5 minutes, they are all just preparing and arranging the price action that will eventually play out on the high time frame, which is on the 4 hours, daily, and the weekly. So, is is a week, is a candlestick week. I need to just write it down. When we talk about liquidity, we are talking about candlestick week. Week. Let me just write that. Note. When we talk about liquidity, okay, we are basically, or you can call it the shadow. That's the one that many people know, the candlestick shadow, right? We are basically talking about candlestick week or shadow. So that is to tell you that there's absolutely nothing that happens in the market on the charts that don't have a meaning. Every single thing has a meaning, including the shadow of a candle, including the wick of a candle. So when we talk about liquidity, I'm basically talking about the candlestick. Sorry, excuse me. Hello? Hello? Sorry, can you just reduce your voice a bit? Thank you. So, when we talk about liquidity, we're basically about blah, blah. All right, now transactional liquidity is the last week before the break of structure. So we're going to look at all of that in the chart right now. So we have this here. Transaction liquidity is basically last candlestick shadow for that's fine. The last candlestick shadow before a break of structure. True. That comes to channel point. Okay. So transactional liquidity is also a very strong, decisive point of the market, such that whenever price takes that liquidity, that shadow, that week, there's bound to be a strong reaction. Either it consolidates or it goes the opposite direction almost immediately. So there's not much to talk about transactional liquidity, but we're going to draw it. Where have that drawing in my book? Hold on. Sorry, excuse me. Transactional liquidity. Fantastic. I found it. So this is what it looks like, right? This is what it looks like. So it looks like this is what it looks like. Okay, good. So let's draw that shape. So here we have traditional liquidity as the last candlestick shadow before a book of structure. So price is say, let's see, price is fine, right? Does a retracement, then does this pullback, then gives us this, right? So it is the last, wait for first days. Hold on. Last liquidity qualification. I'm just looking for a place where I know I explain it better. What trade based on 15, blah, blah, blah. Pattern to okay, for a break of structure. So where's our liquidity? Where's our traditional liquidity? Right here. Here's our traditional liquidity. This is it. Here. You can say this is the last high or the last candlestick week body. Anything that happened, anything, it can be anything. It can be any kind of thing that has happened here. It doesn't matter. All we are saying is that this is usually where the transactional liquidity is located. As long as after that thing happened, there was like a break of structure and all of that. That is a transactional liquidity. So price took the high and then did what? It immediately did what? Change direction. So you can just label this as our transactional liquidity. So can you see why I don't really care about the names of these liquidities? Because price will always react off either an old high, old low, and all of what we have explained. All I know is the logic behind it. I understand the logic behind it, understand the logic behind transactional liquidity, logic behind structural liquidity, logic behind this liquidity, and I know how to identify it. That's the most important thing. So nobody should allow anybody to deceive them with too many funny names. They all you need to know is the logic behind it. So let's quickly look at the charts for examples of the transactional liquidity, structural liquidity, and inducement liquidity. Let's look at the charts for those examples. Let's go to a clean chart for that. This is not a clean chart enough. Sellers in the US, they are trying to take short-term control. Enough in Europe. All right, now this is it. This is a clean chart. So the first thing was what? Inducement liquidity. We said inducement liquidity happens when the pullback is not sufficient enough. So I'm going to mark a bunch of inducement liquidities right now. And in the future, we should expect, since that we are on a buy trend, right? In the future, we should expect that price should come back to take these lows here. One, and mark others. Okay. Okay. There's a little tiny pullback here that did not quite go through. Okay. Then we have it almost everywhere. So as a smart trader now, you can just use these points as your take profit zones, because when price eventually starts to sell, we already know where it is going to. We already said price moves from one liquidity point to the other. That is what we said. So when price eventually starts to sell, we know that price is coming for disinducement liquidity, disinducement liquidity, disinducement liquidity, and so on and so forth. So these yellow zones are marked so far, where we can find our inducement liquidity. Anywhere that price did not give a sufficient pullback is an inducement, and it will use it will it will eventually come claim that level before it continues in its initial direction. So these are inducement liquidities. Let us look for, say, let's look for a transactional liquidity. The last liquidity before a break of structure. Okay, hold on. Structural liquidity, the last low before the main low. All these things we should be looking for. Okay, so this is where we have a nice confluence here. We have the last low before the main low. Let me mark that out with a difference. So we have the last low. Where is it? I just saw it now. So we have the last low here. Okay, now the last low here before the main low. So what happened? You can see why this is a very strong confluence. You can see why adding liquidity as your confluence is a very strong way to trade. It's a very strong, it puts the odds in your favor, basically. So here we have the last low before the main low, and on the last low before the main low, we have another block. We have a fair value gap, and we have it's sitting directly on the psychological level. So this is a prime, lovely, sweet trade, which you can see immediately price tapped in to that level. Look at the reaction. Immediately price tapped into the level. You can see how far it bought. Even when it bought, you can see. This is how many pips that it gave. I just want to show you how many pips you can record anytime your trade aligns like this. This is over 189 pips. So each time that your trade aligns, expect price to give you crazy, crazy, crazy returns. So as a trader, all you just need to do is sit down and wait for your trade conferences to align. Starting with market structure, you need to understand what trend we are on. Are we on a buy trend? Are we on a sell trend? That's the first thing. Then it goes down to marking out your support zone. Where is your support zone? Where is your resistance zone? Where is your demand zone? Where is your supply zone? You need to know. Because why? If you want to buy, you must be buying from a support level. If you want to sell, you must be selling from a support level. And what makes your confidence strong is when your support level or your demand level, whatever, is, in synchronization with your fair value gap, for example, or your psychological level, and then you can be able to ascertain where is the next draw on liquidity. You understanding where the next draw on liquidity is you understanding where price is most likely going to. Okay. All right. So for the transactional liquidity, okay, let me see. I think I have a good example. Hold on, looking for one. Last high before the break of structure, or the last low before the change of character, is where you find your structural liquidity. I think where we will find that thing mostly is in GBP USD, because I know that GBP USD always gives that kind of price action. It always gives that kind of price action. Let me see this trade I called on the GPY. Still selling. Okay. So that GBP USD is where I know that I will most likely see that transactional liquidity a lot. Okay. I think I found one already. Last high before the break of structure. Last high or the last low. Okay. So it's a scenario where price is actually taking a level before reacting. So let's look at this scenario where price actually taking a level before reacting. So here we have a high, right? Okay, let's not use the name. So hold. So we have a high right here. And what happened? Please remember that this is on a 4 hour, so regardless of the fact that the candles are small, it's a very powerful time frame. So when price eventually took this high, what happened? It took the high with this candle, this particular candle, and you can see the change of character. And then the same thing happened here again. The same thing happened here on this high. So price took this high and pretended like it was going to do like a break of structure. But it did not actually break structure. Instead, it gave a tweezer top, and it dropped. So basically, your job as a trader is to sit down and actually identify all of these zones. You need to sit down, that's what, when we say traders are studying and we say they are always learning and they're always on the chat, it's these things. Just sit down, identify the last low before the main low, identify all of the pullbacks that did not quite get, so that were not efficient enough. Okay, we've talked about efficient pullbacks and inefficient pullback. And an efficient pullback is simply a pullback that is more than the 50% range of a particular impulsive move. Like, for example, look at this move. This is a move that started. This is the low of this move here. But look at the high. Can you see? And in between, what can we see? We can see pullbacks that were not sufficient. All these tiny pullbacks are in their liquidity. And like I said, I don't care about the name. All I know is that price is going to come and take all this liquidity at the end of the day. And it will enjoy taking it. You can just come take it with a very long candle. You can just simply come take it with a very long candle, and that settles it. Everybody go home. Market has closed, right? So as a trader, your job is to sit down, identify all these levels. Where is your inducement liquidity? Where is your structural liquidity? Where is um, your transactional liquidity? All of these things are going to help you to understand how to frame a trade and understand where price will eventually be heading to. So why did I take this trade right here? It's simple. Number one, we are on a bullish trend. 1, 2, price is sitting, or price, you can see price broke as in the volume that price used to break this weekly level. It's too much. Price broke the weekly level, created a pullback, which was an inducement. Price took that inducement. So we have the weekly level 1, 2, we have the inducement, 3, we have on that other chart, this place was an order block. So this place right here is an order block. So we have about 4 confluences here. And I learned from my mentor that once you have three confluences alone are enough for you to take a trade confidently. So we're going to buy real USD at least to the previous high, and then that's that. After today, I don't know. As in, I thought that the news was going to strengthen the dollar, but I mean, it has weakened it even further. And there's no two ways about it. Our fifth confluence is news, fundamental news. And it says that on Investopedia, we have fundamental news saying that Euro USD is strongly bullish. Okay, so this is it. On the daily, we are bullish, but on the hourly, we are kind of like neutral. Okay. GBP USD has started changing character little by little, and I expect Euro JPY, Euro USD to change character, but maybe not today. Maybe not today. We might have just one last push up before we eventually dump. As you can see, we might have just one last push up or we eventually dump. But whatever it is, guys, it's necessary. Take a trade, put your stop loss. Nobody owns the market. You can just only bank on your confluences. You can only bank on your strategy. You cannot necessarily force the market to do your bid. No, you cannot. All right. This video is going to be posted to my YouTube channel. So in the future, when you watch this video, ensure that you take out the time to sit down, identify where your inducement liquidity is, identify where your structural liquidity is. It's for your own good. Identify where your transactional liquidity is, so that when you frame a trade, you can be confident about what you expect from that trade, where you expect the market to be heading to because of your knowledge of liquidity. All right, guys, so that'll be all for now. Sorry, let me get this in shape. Okay. So yeah, yeah, yeah. Now, buying Euro USD, okay, we already said it's going to the previous high, which is this high. Yeah, so that's just basically what we are looking at. But if you look at it on the daily time frame, you can be able to see it makes like a different kind of sense. Let's hide this. So here we can see what is going on. Look at how price has reacted so far. Very bullish. Unless price gives us an engulfing candle for this day, then we will say, okay, maybe price is changing character. But for now, we might expect price to come take this high, which it has already done actually. That's taking the high, remaining all these bodies, all these places here that don't have any order block. So it's possible that price might want to reach into this level here before dumping. Whichever way, whatever it does, I'm a day trader, and all I know is that I'm going to capitalize on what is happening currently in the market. I don't care about what's going to happen in the next 5 years or in the next 1 week. All I know is what is happening right now and how can I capitalize on it. All right, so that'll be all for now. If you watch this video anytime in the future, ensure that you don't just be a watcher, but you actually be a practitioner of what you watch. You need to spend time. It's going to take you time. I remember when I started learning, I did not necessarily know what they were saying. I was just watching. I did not care whether I understood the language they were speaking. All I know was that I was just watching. And when I finish watching, I will go to my chat and practice what I thought I heard. Okay, and through my trial and error and everything, I was just trying, and eventually it began to come together and it began to make some sense to me, right? So I pray that this video makes sense to anybody, somebody out there that watches it, and pray that you have a fantastic trading experience. And I pray that this actually enhances your trading style in one way or the other. All right. So that'll be all for now. Thank you all so much for connecting wherever you are. And see you on the other side, see you at the top, basically. Right? So yes, our Euro USD trade is playing out nicely already. And we are on. Right. Thank you so much. That's all for now. Bye. Bye. All right, I'm stop sharing the screen.